Netflix reports earnings today, July 18, after hours, so in less than 30 minutes. So in this video, we will go over our Netflix earnings trade based on the data that we analyzed today. So keep that in mind. It is only a snapshot of the data from today because we have not been tracking Netflix for the past few days. We have been busy with other stock picks that we share with our members only. And so keep that in mind that the risk with trading earnings is a lot higher, especially if you do not monitor the data on a daily basis. So this is the most significant trade that we detected today. 218. This is why we wait until the last few minutes of the market, because we want to make sure that we get the most significant trade of the day. You can see here, this was done at 218. There's only 300 contracts, but this is still very, very significant because this is the 550 strike puts and the 1030 strike calls. Even though they expire January 2026, you can see the price that they are paying is quite significant. In fact, it is much larger in comparison to other trades, 54.50 and 31.50. Okay, and when we go to the chain to see these January 2026 options, we can see that these 550 strike puts right over here are opening trades because the open interest is just 136, 300 volume today. Okay, and what they are doing is selling the 550 strike puts, and then for the 1030 strike calls, they are also opening this trade. You can see 300 greater than the open interest of just one, where they are buying these call options. And so when we analyze this trade, you can see that this is a bullish long trade. You can see from the Greeks, this is a positive delta trade. So this signal is bullish. Okay, and they spent a lot of capital on this trade. Even though there's only 300 contracts, they sold the 550 strike puts, meaning they're willing to own 100 shares at this strike price, selling cash secured puts. So each contract required $55,000 of buying power. And since we had 300 contracts, this was $16.5 million. Okay, this is the total trade cost, at least how much they had to have in order to put on this type of trade. It is hedged. You can see this flat line here. And so keep that in mind. And the way we are trading earnings, okay, is slightly different because we are going to use position sizing to manage our risk. We're going to the July 19 expiration cycle that expires just tomorrow, because this is just purely an earnings trade. What we did was at the 690 strike calls for each of our trades, we sold 2, and we bought the 692.5 strike call and the 685 strike call. And so when you analyze this trade, you can see here that each of our trades costs $53 of debit each. We are going bullish long, and so you can see that we have a positive delta on this trade. And if it goes up, we can make quite a substantial amount. You can see max profit $197. We spent 53, so the risk to reward ratio is very much in our favor. 197 is our reward divided by the risk of 53, a risk to reward of 3.7. So we could potentially make 371% profit on this trade. But again, This is a very risky trade because of earnings, so keep that in mind. Let us know in the comments below, what do you think will happen to Netflix after earnings? Will it go up or will it go down? As usual, if you want the higher chance of profit trades, make sure to go to our website where there are lower risk, higher chance of profit, not earnings trades. Okay, so keep that in mind. All right, take care everyone, and good luck.